Beautiful Thursday morning right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. I'm Ladi Williams. It's great to have you join us. First off, let's take a look at what's happening in the news. Today we see 736.78 billion naira. That's the total amount shared as revenue distribution by the Federation Account Allocation Committee to the federal, state and local governments. A breakdown of the amount, which is slightly lower than the 760.23 billion naira shared for September, shows that the federal government received 293.95 billion naira, states got 239.512 billion naira. Local government councils received 177.08 billion naira, while 26.22 billion naira was allocated to the oil-producing states as a 13% revenue there, as we see behind me. Meanwhile, FACT says the country's excess crude account accruals, which plummeted from $35.7 million in June to just $376,655 in July, has rebounded further to $472,513. All right, moving on to my first conversation now. The construction of Lekki Deep Seaport was officially started June 15th, 2020, and was completed October 24, 2022. And the total contract value for the project's first phase is $581 million. For expectations, let's talk now to Engineer Aramide Adeoye, SA to Governor, Works and Infrastructure, Lagos State, joining me via Zoom on the program today. Good morning. Great to have you on the program, Engineer. So, how much of a game changer is this deep sea-port right now? Because I know deep sea-ports are supposed to, help with cargo and decongesting our already congested ports. But how much of a game changer is this?
Okay, so the Lekki Deep Sea Port, like all other ports that you have around, this time around, the draft is about 16.5 meters high. So that means it can take large vessels. You can actually bring in a lot of cargo in. But beyond that cargo and the multiplier effect is expected to bring, it's also for investors, the kind of revenues that we expect to get, both on the federal side and on the state side with the deep sea port. The Papa ports, in terms of the size, in terms of the volume, has long been outstretched. And I'm hoping that with this one now that has been done and completed, we can increase the volume of cargo along that axis. But the fear for most investors will be the infrastructure around there. And like I was telling Neil Musha, the guy from Bloomberg last week, to tell him that as a government in Lagos, we are indeed very proactive. 2 years ago, just about the same time that the construction work was going to start on that deep sea port. 4 months before that, we had actualized the first phase of Lekki-Ekpe Expressway. And we decided, you know what, for the volumes of cargo that will be coming out and going outward of Lagos to areas Ekpe and other parts of the Federation, it's good that we make this road sustainable. And then we decided to not only expand that road, we also will turn the pavement into a rigid concrete one. So it's longer lasting.
Right.
That's on the first phase of it. While we already started the construction work on the second phase from Electric Junction back towards Ibamadesoya. So it's expected that the volume of, because the whole idea is we will have no use if those cargo, they come out and we cannot get them out as swiftly as possible.
All right, what is the revenue generating prospect of this Lekki Deep Sea Port?
Oh, high. It's estimated that in the concession period life, we would get close to about $200 billion. Close to about $200 billion. And that for us, it's a lot of revenues. The federal government also know this, and that's why also they keyed in to say this main artery into that deep sea port will be concessioned, and then that road also be widened, even though the state government has taken the bull to actually widen the main expressway. But the one leading directly to the port, because of what they see the potentials under the tax credit scheme, Mrs. Dangote, the constructor, Mrs. High Tech, is already working on that road, just to expand it into a dual carriageway with a shoulder. But like people would say, would this from a two-lane carriageway into a dual-lane carriageway and then the shoulder, will it take all of the volume of traffic that is expected. And so as a state, we're already in the process of discussing with the federal government to say, yes, in the short run, this is it, but in the long term, this is a cross-section that we think would work. And we're working cooperatively at that. We're working assiduously at that. I think we're speaking to the same thing now.
And obviously, funding this kind of project is definitely, not cheap. And also for future funding, where can we say, the funding, came from to actually make this a reality?
So that's coming, the one on the federal government side is coming under the tax credit scheme. And then as a state, the first phase that we did came under, it was a contractor financing, and then with the balance coming from IGR. I keep telling people infrastructure costs a lot of money. And the earlier we all know it and realize it, that the only way that you do roads, that you fund roads, is either from taxes, from tax credit schemes, from private investors, equities from other bringing inject capital, equity capital from private investors. There is no other way to build roads. But infrastructure is not cheap. And of course, we're looking outwards beyond the normal IGR revenues. As you all know it, the budget size for Lagos State, particularly for Ministry of Works, hovers around 120 billion to about 140 billion, depending on what the budget size is. At best now, about 150 billion, 140, 150 billion. But most of these roads, particularly on the rigid pavements, they're in excess of 100 billion. So you cannot just do one road and then you leave the whole citizenry in a quagmire. So we need other source of budget, other source of funding.
And where do you think this funding is going to come from?
So from bonds. You recollect that about a year ago, Lagos State government, we had the first largest size bond, about 100 billion from the office DMO. That was about a year and a half ago. It was the largest bond by a state government in the whole of the federation. So we expect more of bonds, a mixture of bonds, sukuk, RTITS. That's what we expect to see. Very little mix of revenues. Like you said, this morning, you know what the budget size, what was allocated to the states. It's dwindling. The resources are dwindling. So we are not looking more into the normal IGR funding. That wouldn't carry us anywhere. The federal government has also realized that over the years, particularly in the last 4 years, the Minister for Works clearly said it when they came in 2015. The number of the debt that was owed, it was in trillions what they were owing contractors. Infrastructure, no contractor works when you are not able to fund those projects. So that was how creative that the government did to say, okay, we will go this way, explore different options. And for us as a state, we are beginning to do something under the PIIP. We call it Private Investor Partnership Program, where we'll say these are the roads that are listed for construction, and we expect investors to come in. In return on their investment, we offer different forms of sweeteners, either tax credit, concession rights, use of either on signages, so many things that we do, but we take it on a case-by-case basis. We've done that experiment. It's worked for Oniru Network of Roads Circle around Victoria Island 2 years ago. That was commissioned in rigid pavement. It's also worked presently now. Senate is doing something along Murphy Adetoro Road. Even though they had done some construction and Odasio years back, but they've come again to say, we want to partner with Lagos State government and we want to take Omoba Murphy Adetoro Road in Metiosa. I've also had Messrs. Access Bank come up to say they want to do Mayegun. Mayegun is another new construction that is coming. So the banks are coming up. Of late, they're coming up to say we want to do this. Ditto also data centers, access to data centers around Lagos. And then investors around that kind of industry are coming up to say we can take this up with the state government and let us fund it. So we're beginning to see all of those manifest.
Okay, well, globally, I know the Chinese, they have a lot of interest when it comes to, building ports in different countries. Did the Chinese play any role in the construction of this Lekki deep sea port, and are they playing any roles going forward?
Oh, absolutely. So the deep sea port, it's a partnership, it's a private sector participation. The proponents, Mrs. Tolaram and the Chinese, actually they injected some fund equity. The state government put their own equity down. The proponents also put theirs down, and then the Chinese check through the EPC contractor, Mrs. Check, also contributed into it. And so that's reflected also in the sharing formula for the revenues. And then, as you are aware, the Port Mainland Bridge, because I tell people the real game changer to all of this is the Port Mainland Bridge. Last November 1st, just about a week ago, we opened the final bids from the three likely contractors on the Port Mainland Bridge. We are in the process of technical evaluation and the financial evaluation as I speak. And before the end of the month, we'll be able to announce who the preferred bidder is and the reserve bidder on the Port Mainland Bridge. That is coming, a lot of funding coming from the Chinese. So it's a PPP thing, and then with most of revenues coming and guaranteed by the Chinese Exim Bank.
Okay, well, I know that running a deep sea port, requires, a lot of things, especially, constant power, electricity. And obviously we know where we are in Nigeria now when it comes to power supply. What are the plans to make sure there is constant supply of electricity, to make sure that we actually get the gains from this Lekki deep sea port?
Thank you, Ladi. So one of the things that we're doing, like I said, the cross-section of what the federal government wants to do now in the short term, we know it. We know what we want to build on that road in the long term. And that right of way actually takes care of all of the utilities that are coming in, including the power lines, the new distribution power lines. That's on the first row. About 4 months ago, we presented to the House of Assembly the laws regulating that will allow people coming, investors coming in the area of power, where you can ring fence. So for a particular area, you ring fence what exactly the power, if you generate power, ring fence, and then for that catchment, you can be able to distribute power. Hitherto, it was not that. It couldn't be possible. So the laws passed on to the Assembly for vetting is on, and I think that before the end of the year, the House of Assembly can actually pass that law. And once that bill is passed, it allows investors the option of coming in and how they can come in to provide that power. While also for the normal upgrade on the normal line that they're intending to build new lines, the right of way for that is also ongoing. So I think we're taking note of that in the way it's not just enough to do the port, but also the generation and the things that we're doing, the laws, what we're tweaking around the laws to enable investors coming in that sector.
And talking about laws and legal framework for the deep sea port, what are the plans for ownership, operations, safety, and security issues? Have they been clearly spelt out?
Oh, they have been. They have been from day one. Like I said, the proponents are tolerant. That's all spelled out in the agreement, in the JV agreement. It's something that we've actually looked through very well before signing, and that's why you saw it all work. It was private sector driven. It's not every time that you build a deep sea port in 2 years. All of those were done and dusted. I think we're good to go.
All right. Well,
what has always been of concern, major concern, has always been the access. But in terms of operationally running efficiently, all of those has been taken care of in the JV, in the operational agreement.
All right, let's look at jobs now. We know unemployment rate, in Nigeria about 33%, as we speak. What's the job creation potential, of this port?
So for the ports at full capacity, we expect that it will create jobs for at least close to 200,000 people. 200,000 people, the handlers, the skilled, the skilled, the unskilled. Also other businesses in terms of transport haulage system. We're beginning to get requests now in Ministry of Works, people wanting to do trailer parks opportunities for trailer parks around area. As I speak, the approvals, 2 or 3 approvals are under consideration for people to build trailer parks around that port area. So opportunities are coming for haulage business, for people who work in the port, cargoes, and all of the rest.
So
in all, we expect volumes
so I'm guessing there's also a value chain value chain potential.
All to them, end to end, over 200,000 persons be employed, increase in employment.
All right, that sounds good. That sounds good. We do need a lot of jobs, at this time. I want to thank you so much, Engineer Aramide Adeoye, SA to Governor, Works and Infrastructure, Lagos State. It was great having you on the program.
Thank you, Larry. Thank you.
All right, so I was speaking to Engineer Aramide Adeoye there, talking about the Lekki deep sea port. Well, we're going to take a break now. When we come back, we're going to drill down on oil exploration in Nigeria. What are the prospects with this new rig found in the north? That's our next conversation. Do stay with us. This is Business Morning. Welcome back. Now to our next conversation. Earlier this week, President Muhammadu Buhari flagged off the Commodities Integrated Development Project in the northeast, and the first of its kind in the zone. And the project is expected with a daily production of about 50,000 barrels of crude per day. That sounds interesting. Join us now is John Wajumogu, Energy and Infrastructure Leader, EY West Africa. Join us right here in the studio. Great to have you, and happy birthday.
Thank you. Thank you. And very happy to be here today.
Yeah, it's great to have you. So it's an estimated 50,000 barrels per day. I'm sure that's no small fry.
It's not. And what is interesting about it is that it adds to our production profile, and it couldn't have come at a very needed time, given the issues we've had with dwindling production. And so being able to find a new source of supply only adds to it, and also removes the concentration risk that we've been having by only the Niger Delta Basin being the main source of crude oil and gas supply for the country. But having found a discovery and a production source in the north, it only helps us with that diversity of supply, and also the other benefits it has in energy security and the socio-economic impact that having a oil and gas production source in the northern part of the country.
So we can expect more revenue?
Of course. At the end of the day, it adds to revenue from crude oil, which is the main source of government revenue. And I guess what people may be asking is, at a time when we are transitioning away from fossil fuel, is this a good thing? Mm-hmm. Well, it is, because to face the facts, oil and gas is still the mainstay of the economy for Nigeria and a lot of emerging economy, and will be what will finance the energy transition. So like NNPC says, energy for now, energy for later. So oil and gas still remains the mainstay of the economy and will be the primary source of funding that transition to lower carbon energies, and as well as funding the industrialization and growth of other sectors as well. So it's a good thing.
And talking about energy transition, we know COP27, they did come to some kind of deal for nations that are adversely impacted by the use of dirty alternatives. Right. So with this further findings, exploration, how does that impact that deal?
So I think part of the conversation around climate change and energy transition is that it would happen at different places at different times. The pathway for us means a longer tail for fossil fuel than, say, countries in the OECD nations, or would I say just categorically the global north. So for us, given that fossil fuel is going to be part of our reality for a while, and the energy transition, the role that fossil fuel is going to play, like I said, will have a long tail, then something like this helps us with that transition, in the sense that in the hierarchy of needs, energy security and energy access, more so than security, it's more important to us. If you think about the OECD nations, with the war in Ukraine, energy security became paramount for them. But that's a different sort of need, because that energy security can be met by different sources, by preponderance of supply, right? But for us, access is very key. And with finding multiple sources of supply only helps in securing our access to energy. Until now, most energy, like I mentioned, came from the Niger Delta Basin, and you would have to add a huge cost transport fuel and energy to the northern part of the country. But with having a source of supply here, you're now able to even provide energy to people in that area closer to them at a relatively lower cost. So the economic multiplier impact of having that discovery is going to be huge, and it's going to be beneficial to the country.
And obviously, it's quite a big find. But do you expect more finds, in the north going forward? And what are the risks, to getting all of that oil from north? Do we still have that risk of oil theft still rearing its ugly head?
Well, the good thing about this is that we've had 60 years of experience now that we can rely on. The Niger Delta has provided a model of what works and what doesn't work. So I'm looking for the operators in that area to leverage the lessons learned around pipeline security, but more importantly, in dealing with the underlying drivers of the theft and insecurity, which is some of the, the social contracts that operators have with host communities. And there are models that we've seen that has worked in the Niger Delta, and I'll be looking for a number of these operators in the north to take those lessons learned and apply them in the north, and that would help stem the issues of theft and insecurity that obtains in the Niger Delta Basin, and hopefully we won't have the same situation in the north, having had this experience.
Hopefully. Yeah. Well, the project attracted about over $3 billion, in fossil energy, coming at a time where, investment in exploration is dwindling.
I will say it's good. It's good news. It means that there's still money out there to fund fossil fuel, which I mentioned. It's very key to our growth, our economic growth. It's very key for a whole host of social impact issues, part of the UN, Millennium Goals, food security, poverty alleviation, all of that. Fossil fuel is a pathway for us because it's what fuels our industrialization. And the threat that the oil and gas industry was facing was lack of finance, right? But with something like this, where $3 billion has been pumped into that particular environment, then it's only a good news. And for me, it's just the beginning. And it shows that there's a recognition that fossil fuel is still going to be here for a while. We're not saying that energy transition doesn't happen. It is happening, right? And will happen, but it will happen at different stages. But for us in the global south and in Africa in particular, where energy access is a big issue, where we have low levels of industrialization, the only way right now for us to overcome that challenge is through, leveraging and exploiting our huge endowment of hydrocarbons, and to find that there are financiers and investors who also have that same narrative and are willing to invest. It's quite comforting.
All right. Well, we're still early days, at this time. What are your expectations for Nigeria's oil industry going forward?
Well, my expectation is that this is only the beginning. It has gone through. The oil industry has always suffered cyclical shocks. But over the last couple of years, maybe the last 5 years, from COVID to your regular geopolitical tensions to the host community issues, it's been quite a volatile environment. But with the global economy hopefully rebounding, we hope, next year, and energy consumption on the rise, and all other variable factors that typically drives energy consumption, so population growth, increased industrialization, you're going to see, I believe it all augurs well for the oil and gas industry. I mean, everything in this room, there's a popular picture that shows that, imagine life without oil. You're going to have everything in this room, one way or the other, uses oil. Everything, not only oil, but gas, and it has a very wide impact in every activity we do. So some of the factors that were derailing the growth of the industry, we hope with the measures that are being put in place in Nigeria, particularly the PIA, with how it resolves regulatory uncertainty, with the Host Community Development Fund coming in and helping deal with some of the restiveness that have stalled production, with the Environmental Trust Fund set up as part of the PIA, dealing with environmental impact of oil and gas drilling, even with climate change and the enforcement of low carbon and reduction of carbon emissions, and meaning that they're pushing for a sustainable way of oil and gas production. I think all of this is going to combine together, create a very favorable environment for oil and gas players. And I think the industry, it's only going to be bigger.
Just a matter of time.
Just a matter of time.
There's been a lot of volatility, when we look at the markets, talking about the oil market. But thank you so much, Mr. John Wajumogu, Energy and Infrastructure Leader, EY, West Africa. It was great having you. Happy birthday again.
Thank you. Appreciate it.
All right, so we're talking oil, the oil exploration in Nigeria. So now we're going to take a break. When we come back, we're going to be looking at the commodities market update. Let's see what's happening there. Still a lot of volatility in that market. That's our next conversation. Just stay with us. And now for commodities market update, we have Dr. Adesola Sumoni, analyst, financial derivatives company, join us via Zoom. Great to have you on the program.
Great to have you. Thanks for having me, Ladi.
Yeah, always great to have you. So, Dr. Adesola, we're back again, with this market. The volatility is still there, but we're seeing a bigger move, downside.
Yes, indeed, Ladi. The oil market has been volatile this week, and I think yesterday we saw almost a 4% decline in Brent crude price, and that was driven by a host of factors. So on the demand side, we have larger than expected build-up in gasoline stockpiles in the US. Analysts expected a build-up of around 380,000 barrels per day. 380,000 barrels. Meanwhile, the actual build-up, according to data from the Energy Information Administration in the US, showed a build-up of around 3.1 million barrels. Also, we saw a larger than expected build-up in crude stockpiles. And usually, build-up in crude stockpiles signifies or signals weakening demand. In addition to that, we're also seeing surging cases of coronavirus in China, or COVID-19 virus in China, and taken together with China's zero tolerance policy, we are seeing a lot of lockdowns, a lot of slowdown in economic activity, and that also has implications for energy demand, particularly because China is one of the largest importer of crude oil globally. So the slowdown in economic activity as a result of coronavirus is also dampening oil demand. Furthermore, we are seeing, still on the demand side, we saw an economic outlook from the OECD, which forecasts, slowing global economic growth for 2023. And this again points towards, slower or weaker or softer oil demand for 2023. So those are the factors on the demand side. On the supply side, I think this is also one of the biggest factors affecting oil on the supply side is Russia. So the EU, the G7, I beg your pardon, it plans a price cap on Russia to cap the price at which Russia is able to sell their oil, and the cap is, according to some sources, ranges between $65 to $70 per barrel. Now that is quite interesting because Russia is currently selling its price below that level. We said previously that Russia is having to sell its oil at a discount because of its war in Ukraine. So now this price cap is above what Russia is currently selling its oil, and that is good for Russia. Anyone who did economics, I would tell you that for a price ceiling to be binding, it needs to be below the equilibrium price. So with price cap above what Russia is currently selling, it is still profitable for Russia to sell, and the cost of production for a barrel of oil for Russia is around $20 per barrel. So it's still profitable for Russia to sell oil, and Russia is still going to sell oil.
So Desola, do you think the right cap, if they're looking at a real cap, what do you think that would be? Around maybe 10 to $10?
Oh, obviously. No, but I mean, for the cap to be effective, for the cap to be binding, it needs to be below what Russia is currently selling its oil for. I mean, Russia is selling oil to north of Europe for around $62 to $63 per barrel, and to the Mediterranean around $67 to $68 per barrel. Meanwhile, the cap is looking at an upper bound of $70 per barrel. So there's still some wiggle room. However, the US, I think the Secretary of State of the US has said the cap would be kind of adjustable. So we may see the cap adjusted below what Russia is currently selling, and then that would be binding, and that would have an effect on global oil supply.
All right, what's happening with our external reserves? It's down about 1.34%. Is that downtrend back again?
I won't call it a trend yet. I mean, for something to be a trend, it has to be continuous, right? So what is happening is, I think the central bank is trying to kind of reduce the depreciation of the naira by injecting some more dollars into the market. Like, in the past couple of weeks, the naira was depreciating quite sharply, but we are seeing the naira begin to appreciate now. I think part of it is because of the central bank is injecting more FX into the market. Also, we are seeing lower oil receipts. We are seeing oil prices are quite relatively lower. I mean, today oil prices are around like $85 per barrel. A month ago, they were I think about $90 per barrel. So we are seeing also lower oil receipts, and so those factors together are why we are seeing the external reserves decline.
Right, and so much, obviously happening, in that forex market. But now, bring us up to speed on what's happening with domestic commodity market.
So domestic commodities market, the prices are trending upwards, Ladi, and it's. I mean, yesterday FDC does this presentation by my colleague, Bismarck Rwani, and he said it's going to be a beery Christmas and a sappy New Year, and that's because while there's these festivities, the prices are rising quite sharply, and incomes are not rising quick enough. I mean, if you look at the price of domestic commodities, if you look at the price of a 50 kg bag of gari, it is up 77% month on month to around 23,000 naira. If you look at a basket of onions, it's up 43% to 46,000 naira. If you look at the bag of rice, it's up 40% to 45,000 naira. Sugar, all of these commodities, most of the commodities that we track are trending upwards. And the key drivers, we have, the weaker currency that is for these commodities that have imported content like wheat. So one of it is the exchange rate pass through from the weaker exchange rate. Two is the flooding. The flooding that happened, I think, a couple of months ago, submerged quite a lot of farmland, and that has affected the supply or the availability of these commodities domestically, and that's contributing to the rise in prices. We also have issues about insecurity of transporting some of these commodities down south. So these factors are driving domestic commodity prices upward.
Right. Well, incomes need to find a way to match up with all the strain, consumers are going through right now. Thank you so much, Dr. Adesola Simoni, analyst, financial derivatives company. Thank you.
Thank you, Fab.
All right, we'll take a moment now. All right, let's head to the markets now. We did have quite a good run yesterday, talking about the local bourse, and we have Anete to come and give us the details in that market. Anete, quite an interesting run we had yesterday. Good morning. I could call it the rise of the cement giant.
You might call it the rise of the cement giant, but I'll call it a big surprise entry for the cement companies, because the market was expecting that the latest interest rate hike announcement by the central bank, which is after the last meeting for the year, that it would dent investors' appetite. But in a very surprise move, the market, I'm sure you might be kind of surprised. Yeah, nearly 3%. in just one single day, and that's the highest single day gain we recorded same period last year in November. So it just tells you the markets, like I always used to mention, it can spring up some surprises on the downside or on the upside. So that's it for the market. Now, but we will be getting to the equities market. But first, let's start with the fixed income market. Bearish sentiment is what we had for the bonds market space. Take a look at the board there. The total number of deals carried out is 2 across the 3 instruments there. Total number of deals carried out there was 18, while the total value there, 10.72 billion naira. Average across the benchmark curve, the average yield expanded at the short and long end following profit-taking activities on the March 2025 as well as the March 2035 bonds. But average yield was flat at the mid-segment of the market. Now let's move over to the Treasury bills market. There you see that the only concentration was on the 15th of December 2022 paper. Total number of deals carried out there for value 10 billion, which is what you see over here. Now, if you move over, although we don't have that, for the almost segment, average yield there was flat. It still remained at 10.2%. But when you move over to the central bank special bills, this is what you have. The only concentration there, the market, the fixed income market is not too vibrant as at the close of midweek trading session. The total number of deals carried out there was 4 and a total value of 7.5 billion naira. So now let's talk to Princess Iriwoba, who's a fixed income trader and analyst at FSDH Merchant Bank, to give us more insight into this market. Thank you for joining us, Princess.
Thank you for having me. Good morning.
Hello, Princess. Okay. Now, a couple of days ago, we had the central bank announcing a hike, 100 basis points hike in the country's monetary policy rate, which is the benchmark interest rate. It moved all the way from 15.5% to 16.5%. And just last week, we had Nigeria's inflation rising further to 21.09%, up from 20.77%. Now, how does this play into the markets?
Thank you. The 100 basis point hike by the MPC was a move to combat inflation. This is the third of the hikes we've seen so far this year. In terms of market interpretation, there was a PMA yesterday, and we saw an increase in the stop rate of the longest end by 85 bips. So we've seen markets adjust upward in terms of, as a result of the hike, 100 basis point hike in MPC, the MPR rate. So we've seen market largely bearish post that announcement, the bills and bond market. However, nothing offers react in the same way. So in terms of bid offer spread, that's kind of widened post the announcement. But we've seen that from the last auction yesterday, we've seen that increase spill over into the bill space.
Okay, all right, Princess. Now, yesterday we had a primary market auction by the central bank. So what was the outcome of that primary market auction, and what are we to expect in Thursday's trading session?
At the auction yesterday, DMO sold about 213 billion across the 91-day, the 182-day, and 364-day tenors. For the 91 and 182-day, the rate remained flat as compared to the last auction, closed at 6.5 and 8.05 respectively. But we saw a hike at the longest end by about 85 basis points. The longest end was oversubscribed, about 2.5% more subscribed, 2.5 more than amount on offer. We expect that in today's session, there was a late inflow of FAC. So there's a bit of liquidity in the market. We expect that yields will retrace lower as market participants look to buy. A lot of the demand that was not met at the auction, we expect that to filter into the secondary market today. And we expect that market should close lower in terms of yields into this session.
Okay, thank you, Princess, for that analysis. And as usual, we always keep our eyes on the markets across the board. So that, Ladi, that was the fixed income markets. Unfortunately, time is not my friend at the moment.
We'll get more exactly. later on. Thank you so much, Anita.
Okay.
All right, so that was Anita giving us the details there from the fixed income market. Let's head on now to London. We have Juliana standing by right there. It's all about rising energy costs in the UK right now. Great to have you, Juliana. Good morning. So we saw that report from Ofgem there saying that annual UK energy bills would have hit about £4,279 if not for government support. I guess that's somewhat, good news.
Well, I suppose, good morning, Laddie. It depends on how you look at this, because this time last year, Ofgem, which is the energy regulator, they had a price cap for energy bills at £1,200 a year. And this morning, they have announced that without government support, the energy price cap for the first quarter of 2023 would be over £4,279, which is an eye-watering sum. So yes, in a way, there are some people that will be breathing a sigh of relief, because I don't think anybody really can afford that in this country. Liz Truss, one of the only things she managed to do successfully in her 6-week tenure is put in this energy price cap guarantee of £2,500. So most average households here in the UK won't be paying more than £2,500 a year for their bills. Liz Truss put it in for 2 years, but her Chancellor, the now Chancellor, Jeremy Hunt, he slashed that to about 6 months. So it's £2,500, but in April it will rise to £3,000, and who knows where it will go after that. A side note, but really important, which has come with this Ofgem announcement, is that the government have decided today that they will be launching a £25 million infomercial campaign. So anybody living in the UK over the next few weeks, you're going to be seeing celebrities, ministers, popular faces being rolled out on your TV screen, on the tube, wherever you get your news, basically advising people for how they can save energy. Some people don't like this. Lots of Britons definitely don't like being nannied to. They call it the nanny state, where government tell you what to do. But it's very, very important. Some people still leaving lights on, leaving radiators on. So they will be teaching you the basics, which should help save 15% of your energy bills, possibly.
And Juliana, I'm sure you're doing all you can right now to also save, your energy bills, because I know it's quite expensive. But thank you so much, Juliana. I'll talk to you later on Business Incorporated. Thank you.
Thank you.
All right, that was Juliana there giving us all the details from the UK. Still rising energy costs in the UK and most of Europe at this time. All right, let's move on to other markets now. We see Bitcoin there formed a kind of a nice support there and is doing some kind of uptrend in the market. If you look at the fear greed index, though, not looking so good. Extreme fear still in this market right now, 20 points. We're going deeper into extreme fear. That's how it's looking in the market. Let's look at the market cap there. 836, a bump up there, 1.93% for the market cap in the crypto space. Volume traded down 4.63%. We see Bitcoin dominance there, 38%. Price of Bitcoin this morning saw it much lower than that now. You see volume trade at $32.03 billion. Let's look at the price of Ethereum this morning. We flip over up from the Bitcoin price. We see Ethereum there holding on to that 1,000 level, back at $1,200 there. $11 billion traded in volume for Ethereum, up 3.58%. We're seeing that rally in the market. Some are calling it a bear market rally. It's not at the bottom, might not be in. Let's look at the top alts by market cap there. We see it's all green with BNB there, the biggest mover, up 9.11%. Cardano, 0.68% up. We see eCash there, up 0.74%. And eCash, they did have that block reduction on exchanges there. So now it just takes about one block for you to get your deposits into exchanges. Talking about eCash there, nice reduction, and that should prompt traders to want to, send most of their eCash if they want to trade, and they'll get it faster than what it used to be. Talking about eCash block level there. XRP 38 cents, trying to move back up above that 35-cent level, up 1.28%. Let's say if we have Gilbert Jopata now, financial market analyst. Hello, Gilbert.
Yes, good morning.
Yeah, good morning, Gilbert. So much happening, in this market right now with that FTX contagion, and now we're seeing centralized exchanges trying to release their proof of reserve data. How much help or how much impact is this going to have on the crypto industry?
It's going to bring back trust to centralized exchanges because the collapse of an exchange like FTX was something that we did not likely expect to happen just like that. And after that happened, there was a major withdrawals of cryptos from centralized exchanges to decentralized wallets. We even saw the cold storage ledger that their sales rose to over 500%. And that was when the CEO of Binance, CZ, announced that Binance will start the implementation of the proof of reserve, which actually is a third-party auditing process that actually shows centralized exchange financial position. And now we are seeing major exchanges like Crypto.com, KuCoin, OKX, BitMEX, and the rest. They are following suit. And this is a way to bring back customers' confidence, transparency, and security back to centralized exchanges. Now the industry is demanding this proof of reserve from custodial exchanges, which now act more like the banks. CoinMarketCap also have launched their proof of reserve tracker to bring so that one could check transparency and liquidity of exchanges. And at the end of the day, I think this is something we will do willingly as an industry, where each exchange will have to show their proof of reserve. And the exchanges that don't, we know, okay, these are the bad players and we avoid them, or we just have to have regulators come in to enforce it. But it will be a better thing if exchanges, centralized exchanges, willingly bring out this proof of reserve, so that we know that, okay, these are the people who are transparent with their balance, while those that don't will just fizzle out because customers will have to avoid those kinds of exchanges.
Right. I guess the FTX implosion there, bringing about more developments in the crypto industry. Well, we'll keep tracking to see how it all unfolds. Thank you so much, Gilbert Repeta, financial market analyst. Thank you.
You're welcome.
All right, so that's it for the markets, and that's it for the program today. Thank you so much for watching. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. Remember, you can watch this again and all our other productions. Just flip over to YouTube, flip to our video section, and you can see all our productions. Thank you again for watching. I'm Ladi Williams. Bye for now.